He's the former CEO of Goldman Sachs Asset Management and now chairman and CEO of the Omega Family Office, joining me in a Fox Business exclusive. Leon, great to have you, especially at this time, because you have such a unique perspective on all of this. Give me your gut thought about this war and how it is weaving itself through the markets and the psychology of investors.
Well, I basically would say is that forecasts of the future tell you more about the forecast than they tell you about the future. So what I would say is, my own view is, there's a lot of problems out there. The market is too highly valued. You know, the market before the Iran situation broke out was in the 98th percentile of valuation, which means in the last 100 years, the market was only less expensive 2 out of 100 years. And when I look at the environment of uncertainty, what's going to happen with the election, what's going to happen with Iran, and what's going to happen with profits and profit margins, that I think there's enough uncertainty that the market was too expensive. And I think 2 changes have occurred which feed in the direction of uncertainty. One change is the Iran war, and the second change is I think investors have woken up to the reality that technology is a double-edged sword. Somebody's innovation is somebody's obsolescence. My first job out of college was with Xerox Corporation, and they obsoleted American photocopy. And Xerox, the market was taken away from them by the Japanese with low-cost entrance in photocopying. So I think that the technology is undergoing a change, and you know, we're basically the investors have gone from embracing AI to now wondering whether AI is negative for everybody. So we're trying to find companies that have been negatively affected in the market that are not really affected by AI, in our opinion.
Well, okay.
So new investment.
Well, you say the market is overvalued, but last Friday, the Dow, there were a couple of the indices. I mean, the Russell's already in correction territory, and the NASDAQ was very close to to correction territory. Has the market not come down enough? Have valuations of stocks not come down enough? And do you think that there's going to be some trigger where we see another leg down?
I'm betting on that, yes. I think that, you know, we're heading towards the likelihood of a recession, and that's what ended the bubble of 1982. The oil price was increased tenfold by you know, the Arabs, and that pushes into recession. The technology bubble of 2000 ended when we got into a recession in 2001, 2002. And so I think we're heading towards a recession, and it could happen late this year or next year. If it doesn't happen this year, and it's minority view, I think the market's okay. The market's in a trading range, but I expect the trading range to give way to the downside.
Well,
so
in
we
that
have a
case,
very conservative posture.
Okay, conservative posture. What does that look like, Leon?
Well, we're a bottom-up stock picker. I can't talk about groups. We're underweight technology. We're underweight the high multiple sector of the market. Our 3 most recent purchases are lithium motors, selling at 11 to 8 times what we think they're going to earn. Capital One selling around 7 times, and the third one was I said Capital One, lithium motors, and One Main. These are all single-digit multiples in double-digit world, and we think they're benefiting greatly by AI and not going to be hurt by AI. There are too many bulls out there. You know, there are 18 strategists that submit their estimates to Bloomberg. Not one of them have the market lower at the end of the year than it is today. Not one. And so when everybody's on the same side of the boat, you got to be careful.
So you say it's raining bulls and those bulls are wrong?
I think, you know, they're wrong on the S&P. I think the S&P 500 is a very overvalued index. So I'm looking for things outside of the S&P 500.
Okay, so does that mean small caps?
Not necessarily small caps, less dominant companies, not household names. The public has gone through the index funds.
Can I pick your brain a little bit about this private equity situation? There's a lot of concern that private equity and private credit are in trouble because a lot of them have lent to software companies, and that software companies are in trouble because of this perception that AI is going to make them obsolete. How do you view that? Do you think that there's something ugly really
I think that the
lurking?
market swings to extremes. The market swings to extremes. My guess is the better companies like Apollo, which we own, and areas which we don't own, are basically done credible lending, and they've been smart about their lending. And so they're going to lose money, sure, but is it the extreme? No.
Okay, all right. So you're not
So
worried
I would say
about
that the market.
you're not worried about the Apollos of the world.
Well, Apollos are going to have an increase in their loan loss provision, but it's probably in excess of what how the stock has reacted.
The Iran
So I'm
war.
looking for things that have free cash flow. I'm looking for things that have free cash flow and managements that are growing the value of the business every day and have the financial wherewithal to buy back their own equity and add to the values.
Can I just get
It's very much of a bottom-up,
your final
very
thought?
much of a bottom-up approach.
Okay. Okay, I get it. I mean, I think that that's fascinating because you are somebody who's incredibly experienced. You've seen wars come and go. You've seen all kinds of great financial crises and recessions.
We've survived World War I, World War II, Korean War, and the Vietnam War. We'll survive the current situation, but it's not a good thing. The price of oil is going to affect the economy. It's going to affect final demand. And like I said earlier, I quote Warren Buffett, forecasts of the future tell you more about the forecasts than they tell you about the future. I think a lot of your bullish forecasters are going to change their mind before it's all over. That would be my guess.
Well, it's always a pleasure to have you, Leon. Thank you for coming on. Your perspective is always valued, but especially during a time like this where people are a little concerned, and certainly the market's been quite jittery, so we appreciate it. Thank you so much.
Part of the jittery is also the fact that the market is very fully valued. There's not a lot of room for error.
Yeah, okay, not a lot of room for error.
And that's my...
Thank you.